we use tariffs to stop other countries from flooding our country with cheaper products. Now, Trump has imposed 25% tariffs on Mexico and Canada with an additional 10% on Canadian energy. We get a lot of our energy, especially in the Northeast, from Canada. Chicago, New York, up a little bit higher, Boston. A lot of the energy comes from Canada. So China has retaliated and said they're going to do a 15% tariff on U.S. farm exports and expanded restrictions on U.S. companies. Now, Canada hit back with another tariff. Markets are starting to come back today because we're getting, there's rumors that there's going to be Trump will eventually compromise with these countries because he's not going to allow the stock market to continue to fall. Now, some insiders in the Trump administration are saying that Trump is willing to compromise because it's starting the escalation is starting to rev up. And that's something that they don't want. Now, actually, the S&P 500 is down slightly today. So it was up. The futures were up this morning, but now the market is a little bit down. The Russell 2000 is up. Gold is up. Crude oil is crashing. It's down 4% almost. So China responded to all this, said we're going to do 15% tariffs on U.S. farm exports. But we're also, they put on X.com. It's funny now that countries will fight each other on social media. We live in a brand new world. It's a book called Brave New World. It's one of my favorite books. But China's bold response says they're gonna fight to the end. And what the scary part is that they posted on X.com, formerly Twitter, that if war is what the United States wants, be it a tariff war or a trade war or any other type of war, we're ready to fight until the bitter end. That's a scary statement from China. But China did also say, on another statement, that they're willing to return to negotiations if Trump is willing to do so. So that could have just been a statement to make their people feel like that they're not weak. But China, I believe, will have to return to negotiations because it's very important that they resume talks with Trump because a lot of their economy is built on trade. So Vivian Soto, I appreciate the super chat. Thank you so much. Trump's position, and he said in the address last night, is that during his address late night, Trump said tariffs would cause a little disturbance, but instead insisted that they're about making America rich again. Right? Insiders are saying that Trump will scale back some of the tariffs over the next week. So hopefully these stuff will be over so the market can start to adjust. And a lot of people are listening right now and they say, tariffs? What the heck are those? The only time I studied tariffs was in 8th grade history or 8th grade, economics or whatever. Now, tariffs really haven't been used in the last 50 years. Not really. Other than just, some small tariffs or whatever, but not really used on a large scale. Now, historic tariffs, for those you don't know, are when a country charges more money on top of whatever close that door. I can't. So whatever on top of whatever that they have to pay for that product. Let's say a car is $1,000. If a car is $1,000, they'll have to pay. So if a tariff is 20%, they have to pay 20% on top of that to the government. Then the car is allowed to come through the port. So that's what a tariff is. So tariffs are extra taxes on imported goods from other countries. Now, the traditional reason for tariffs, I appreciate the super chat, Michael Gonzalez. Thank you, Romano, for the content. If you're in San Diego, I get a haircut. I'm going to hit you up for that, Michael. So the traditional reason for tariffs was to make imported goods more expensive, giving the people in the country an incentive to buy homegrown products. That's what tariffs were originally for. So tariffs were used more heavily in the 19th and 20th centuries, 1800s and 1900s. But this is the thing that most people don't realize. Now, Trump is saying, and a lot of other politicians saying that we should get rid of income tax. And people, that sounds like a shocking thing to say, income tax. Why would we get rid of that? But people don't understand the history of income tax. Tariffs were used in the 1900s. That's why we didn't have income tax, because the tariffs covered all the taxes. We charge people from outside the U.S. to pay for our internal operations, the federal government. That's how we funded these things. We didn't need income tax. We got all the money from them. So income tax first got introduced on a big way during the Civil War. The North said, look, we got to get some money for this war as an emergency. The government never lets a good emergency go to waste, like COVID. They do some stuff. That's the reason why they love emergencies or crises. A civil war came. They said, look, we're going to have to put a tax because we got to fight this war. If you want to live, if you want to be safe, if you don't want the South coming in and taking over, we need income tax. Of course, people hand it over because whenever you want people to hand over money, you just scare them to death. They hand over the money. But after the war was over, they tried to keep it. If people fought back, and it was eliminated. So another time, World War II came along. Well, Hitler, I mean, he's a bad man. He's evil. He's almost like a villain in a comic book. He'll kill all you and eat your kids. We need those taxes to protect you and the U.S. borders. Of course, people handed it over. They were proud to. I'm an American, and they handed over those taxes. But this time, the government never took them out, took them back. So what they need tariffs for? They got the money from the people. Money from the people is easier to collect because all you got to do is W-2 them. They make the employers report. They're going to report it. You can get the money easily, and it's consistent, it's dependable, and you can predict it. And regardless of the economic climate, you only have a 5, maybe 10% drawdown on taxes. Because the worst unemployment what could ever get really is about 8, 9%, maybe 10%. It's not going to go much higher than that. During the Great Depression, I think it got up to like 15, 20%, but that was the Great Depression. Normally the highest it's ever got is 10%. So your tax base is not going to drop much more than that. So you'll always have a consistent tax base. A war is not, let's say China gets into a war, they're not going to import products. So all that money's gone. So tariffs are less consistent, less dependable, less predictable. Income tax from the people is predictable. If China starts going around the tariffs, find some way to go around it, you can't do nothing to China except go to war. But if you hide your income tax, they'll put you in jail. You're easy to track. You're in the United States. They can use those laws to make sure you pay. That's why they switched over from income tax to tariffs. Now, this is all, look it all up. Don't just listen to what I'm saying. I could be crazy or I could be drunk. I don't drink at all, but I could be. You don't know. That's why you don't listen to people online 100%. You don't know what their axe to grind is or what their agenda is. So make sure you look all this stuff up. It's 100% true, but make sure you look it up to verify it. But so now Trump's saying he's going to give income tax to replace that. It looks crazy. What is he talking about? Well, yeah, but that's how it traditionally was in most of U.S. history. Tariffs were used to fund the government. So Andres Alvarez, I appreciate the super chat. Damien Munro, I appreciate that. CNN app, yeah, CNC app is coming. I appreciate that, man. So now, if people say, how does all this cause the market to crash? Well, tariffs, like we said, they're harder to collect. So people are expecting the United States to have more volatility in the tax base. Tariffs also create economic uncertainty because we don't know how people are going to absorb those higher prices. Now you go to Walmart, if you go to Walmart and everything's twice as high, because Walmart has a lot of its products from China. Now, how's the market or the economy going to absorb that? Reduce global trade. Maybe the money's not going to move around the world as much as it did. Decrease liquidity, therefore economic downturns in many countries, which will also affect the United States. Shivet, I appreciate the super chat. Higher costs for businesses. Like Walmart, tariffs will increase the cost of imported goods, forcing businesses to raise their prices or absorb the cost, or either a combination of both. Combination of both causes them to not raise salaries as much. So tariffs will propagate through the whole economy. Companies that depend on foreign goods, like automakers, tech funds, and retailers, are going to see lower earnings and further stock declines. Bitcoin continues to get rapidly accumulated by big players. When it drops into the low 80s, every time we see Bitcoin drop into those 80s, we see whales, we see institutions, we see a lot of announcements from big companies like MicroStrategy, like BlackRock, that said that they're buying Bitcoin. That's very strong positive indicators going forward that Bitcoin is still a viable asset. It's still going to go up a lot and we're still at the bottom. Now, if you remember what the 4-phase market cycle is, there's 4 phases in any market cycle: real estate, crypto, stocks, whatever it may be. First, you got accumulation. Second, you have markup. Third, you have distribution. Last, you have markdown. Now, accumulation phase is when the rich, the elite, and the banks buy it. So If they're still buying, that means we're still early in the cycle. Now, I did some research. I looked back at the first real crypto cycle I've ever been through, knowing what I know now. Now, I've been in crypto in 2011. 2013, crypto, Bitcoin crashed. I panicked, sold. Then again in 15, I panicked and sold all my Ethereum. I had 2,000 Ethereum in 2016. There was a DAO hack. A lot of Ethereum was hacked from a DAO. At the time, it was like 20-30% of all Ethereum in existence or available Ethereum. So I panicked and sold everything. Oh, Ethereum's insecure, and I got out. But that was the last time I did that, because after that, I started understanding, why do I keep getting tricked by this? Why do I keep selling at the wrong times? Why do I continue to get scared, panic, and sell everything? Because of what the media tells you. That's when I discovered the 4-phase market cycle. Talk about it in my book a lot. I say, you got accumulation. That's when the rich, the elite, and the banks buy up assets. You got markup. That's when they start marketing it back to you to buy. Then you got distribution. That's when everybody understands what's happening, or they get excited, a lot of FOMO. People come in, buy up that asset. The big players start getting out at the beginning of distribution. They're marketing it back to the regular person, like BlackRock's doing now. We're going to talk about that. And then at the end, it's marked down. The big players are already out, or they've hunkered down for the long term. And then there's nothing else holding up. It comes down. Now, these phases could be tightly in a few months. It could be over a few years. It could be over a few days. But that's the 4-phase market cycle that's apparent in every single market. One of the examples I use is New Orleans. They said that area would never come back, that chemicals have seeped into the ground, that the structure and the foundation of the earth would never again support any type of growth. A lot of people panicked and sold everything they had. 10 years later, it's one of the most bustling parts in the country. It's 20 years later now, but 10 years after that, it became one of the most attractive real estate deals in the country. They built a lot of great things. New Orleans is one of the fastest growing cities in the United States now because of that accumulation phase that happened after Katrina. The rich, the elite, and the banks came and bought up everything. They built it up, then they marketed it back to you. New Orleans is a great place to come. Come to New Orleans. We're having a great time here because now they own it. Same thing's going to happen in LA with the fires. Those people are panicking and selling their houses. Rich, the elite, and the banks are going in and buying it up. That's a 4-phase market cycle. Now, because BlackRock, because MicroStrategy, because a lot of other big players are still in crypto and buying, that tells me we're very early. Back in 2016, if we look at the charts, June of 2016 was the Bitcoin halving. Now, if you go an entire year, a year around, Bitcoin was at about $2,500 a year after that. Now, we didn't see the big gains. That was a year, remember, the halving, this cycle happened in May of 2024. We're not even a year in. So we go 2016, we go all the way to June of 17. That's a year from that halving. Bitcoin was at about $2,500, $2,000. Now, but at the halving, it was at about $500, $600. So it went up, that was back then, the gains were a lot higher. We go up 20, 30% a day. But the real gains in that cycle were not over at that point. They came after that because Bitcoin continued to go up 10 more times. Remember, from 16 halving in June to 17, a year after that halving, Bitcoin went from around $500 to $2,500. That was 5 times gain. But then at $2,500 a year later, it ended up going another 8, 9 times. So we weren't even at the halfway point in that cycle. And that was also true for a lot of altcoins at the time.